I've summed up my 5 takeaways and thoughts about this book in this video. I highly recommend you to read the original book of the author. Please share with me your opinion about this book in the comments below. Inside the Yield Book by Martin Leibowitz is an essential read for anyone who wants to gain a deeper understanding of bond portfolio management. The book provides a comprehensive overview of the Yield Book, a powerful tool that has been used by investors for over 40 years to analyze fixed-income securities. The book starts by explaining the basics of fixed-income securities, including the concept of yield and duration. It then delves into the various types of fixed-income securities, including government bonds, corporate bonds, and mortgage-backed securities. The author also discusses the risks associated with each type of security and how to manage these risks. One of the key features of the Yield Book is its ability to analyze the performance of a bond portfolio under different scenarios. The book explains how to use the Yield Book to measure risk and return, to analyze the impact of interest rate changes on a portfolio, and to construct efficient portfolios. The author also provides valuable insights into the history of bond portfolio management, including the evolution of bond indexes and the development of the first bond funds. He also discusses the impact of regulatory changes on the bond market, such as the introduction of the Volcker Rule and the Dodd-Frank Act. Throughout the book, the author emphasizes the importance of a disciplined approach to bond portfolio management. He stresses the need to focus on long-term goals, to diversify across different types of fixed-income securities, and to rebalance portfolios regularly. One of the things that sets this book apart from other books on bond portfolio management is the author's practical approach. The book includes numerous examples and case studies that illustrate how to apply the concepts discussed in the book in real-world situations. Overall, Inside the Yield Book is an excellent resource for anyone who wants to deepen their knowledge of bond portfolio management. Whether you are a seasoned investor or just starting out, this book will provide you with valuable insights and practical advice that you can use to build and manage a successful bond portfolio. Inside the Yield Book by Martin Leibowitz is a comprehensive guide to bond portfolio management, aimed at investors who are looking to gain a deeper understanding of fixed-income securities. The book provides an in-depth overview of the Yield Book, a powerful tool that has been used by investors for over 4 decades to analyze fixed-income securities. The author covers the basics of fixed-income securities, including the concept of yield and duration, and then goes on to discuss the various types of fixed-income securities, such as government bonds, corporate bonds, and mortgage-backed securities. The Yield Book has been used by investors to measure risk and return, analyze the impact of interest rate changes on a portfolio, and construct efficient portfolios. The book also covers the risks associated with each type of security and how to manage these risks. Throughout the book, the author emphasizes the importance of a disciplined approach to bond portfolio management, focusing on long-term goals, diversification, and regular rebalancing of portfolios. Inside the Yield Book is a valuable resource for investors who want to build and manage a successful bond portfolio. It provides practical advice and insights that can be applied in real-world situations. The author uses examples and case studies to illustrate how to apply the concepts discussed in the book. In addition, the book provides valuable insights into the history of bond portfolio management, including the evolution of bond indexes and the development of the first bond funds. Overall, Inside the Yield Book is an essential read for anyone who wants to deepen their knowledge of bond portfolio management and gain a competitive edge in the fixed-income securities market. Point 2 highlights that the book Inside the Yield Book covers the various types of fixed-income securities, including government bonds, corporate bonds, and mortgage-backed securities. The book provides a detailed explanation of the characteristics of each security type, the risks associated with them, and how to manage those risks. The author provides a comprehensive overview of government bonds, including treasury bills, notes, and bonds. He also covers municipal bonds, which are issued by state and local governments to fund public projects. The book explains how to analyze the credit quality of municipal bonds, as well as how to evaluate the tax implications of investing in them. The author also delves into corporate bonds, which are issued by corporations to raise capital. The book explains how to analyze the creditworthiness of corporate issuers, including evaluating their financial statements and credit ratings. The author also covers high-yield bonds, which are also known as junk bonds, and discusses the risks associated with investing in them. Finally, the book covers mortgage-backed securities, which are securities that are backed by pools of mortgages. The author explains the various types of mortgage-backed securities, including pass-through securities and collateralized mortgage obligations, and discusses how to evaluate the credit risk associated with these securities. Overall, the author provides a detailed and practical guide to fixed-income securities, enabling investors to develop a comprehensive understanding of each security type. The author also provides insights into the risks associated with each security type and how to manage those risks through proper portfolio construction. Point 3 highlights that Inside the Yield book provides insights into the history of bond portfolio management, including the evolution of bond indexes and the development of the first bond funds. The book covers the important milestones and innovations that have shaped the bond market over the years. The book describes the development of the first bond index, the Salomon Brothers Bond Index, which was created in 1972 to track the performance of the bond market. The author explains how the development of bond indexes has led to the creation of index funds, which have become popular investment vehicles for individual and institutional investors alike. The author also covers the development of the first bond mutual funds in the 1920s, which allowed small investors to gain exposure to the bond market. The book explains how the development of bond funds has led to the creation of new investment products, such as exchange-traded funds, ETFs, which provide investors with a low-cost and efficient way to invest in the bond market. Furthermore, the author provides insights into the impact of regulatory changes on the bond market. The book covers the introduction of the Volcker Rule and the Dodd-Frank Act, which were enacted in response to the 2008 financial crisis. These regulations have had a significant impact on the bond market, particularly in terms of liquidity and pricing. Overall, the author provides a historical perspective on the bond market, which is essential for investors who want to gain a deeper understanding of the market and how it has evolved over time. The author's insights into the impact of regulatory changes on the market are particularly valuable, as these changes have had a profound impact on the way that investors approach bond portfolio management. Point 4 emphasizes the importance of a disciplined approach to bond portfolio management. The author stresses the need for investors to focus on long-term goals, diversify across different types of fixed-income securities, and regularly rebalance portfolios. The author advises investors to have a well-defined investment policy statement that outlines their investment objectives, risk tolerance, and asset allocation strategy. The book explains how to develop an investment policy statement and how to use it to guide investment decisions. The author also stresses the importance of diversification, which involves spreading investments across different types of fixed-income securities to reduce the risk of losses. The book explains how to construct a diversified portfolio and how to evaluate the credit quality of individual securities. The author also emphasizes the importance of regularly rebalancing portfolios to maintain the desired asset allocation. Rebalancing involves buying or selling securities to restore the original asset allocation after market movements have caused it to drift away from the target allocation. The book explains how to rebalance portfolios and how to set a rebalancing schedule. Furthermore, the author stresses the importance of monitoring and managing the risks associated with fixed-income securities. The book covers the risks associated with interest rate changes, credit risk, and liquidity risk, and explains how to manage these risks through proper portfolio construction and risk management techniques. Overall, the author provides practical advice on how to approach bond portfolio management in a disciplined and systematic manner. The author's emphasis on long-term goals, diversification, and regular rebalancing is particularly valuable, as it provides investors with a framework for making investment decisions that align with their investment objectives and risk tolerance. Point 5 highlights the importance of being aware of the risks associated with fixed income securities and how to manage those risks. The book explains the various types of risks associated with fixed income securities, including interest rate risk, credit risk, and liquidity risk. Interest rate risk is the risk that changes in interest rates will impact the value of fixed income securities. The book explains how interest rate risk can be managed through proper portfolio construction, including using duration matching and immunization techniques. Credit risk is the risk that the issuer of a fixed income security will default on its obligations. The book explains how to evaluate the credit quality of individual securities and how to manage credit risk through diversification and proper risk management techniques. Liquidity risk is the risk that an investor will be unable to sell a security at a fair price due to a lack of buyers in the market. The book explains how to manage liquidity risk through proper portfolio construction and risk management techniques. The author stresses the importance of managing these risks through proper portfolio construction and risk management techniques. The book provides practical advice on how to construct a portfolio that balances risk and return, how to diversify across different types of fixed income securities, and how to monitor and manage risks on an ongoing basis. Furthermore, the author emphasizes the importance of understanding the risks associated with different types of fixed income securities. The book covers the risks associated with government bonds, municipal bonds, corporate bonds, and mortgage-backed securities, and provides insights into how to manage those risks. Overall, the author provides a comprehensive guide to managing the risks associated with fixed income securities. The author's emphasis on proper portfolio construction and risk management techniques is particularly valuable, as it provides investors with a framework for managing the risks associated with fixed income securities in a disciplined and systematic manner. Point 6 highlights the various ways the Yield Book can be used to analyze fixed income securities. The Yield Book is a powerful tool that has been used by investors for over 40 years to measure risk and return, analyze the impact of interest rate changes on a portfolio, and construct efficient portfolios. The Yield Book provides a range of analytical tools that can be used to evaluate fixed income securities. One of the key features of the Yield Book is its ability to calculate the yield and duration of individual securities and portfolios. This information can be used to evaluate the risk and return characteristics of fixed income securities and to construct portfolios that balance risk and return. The Yield Book can also be used to analyze the impact of interest rate changes on a portfolio. The tool allows investors to simulate the impact of interest rate changes on the value of their portfolio, which can be used to evaluate the sensitivity of their portfolio to interest rate changes, and to construct portfolios that are less sensitive to changes in interest rates. Furthermore, the Yield Book can be used to construct efficient portfolios. An efficient portfolio is one that maximizes returns for a given level of risk or minimizes risk for a given level of returns. The Yield Book provides analytical tools that can be used to construct efficient portfolios that balance risk and return. Overall, the Yield Book is a valuable tool for analyzing fixed income securities and constructing portfolios that balance risk and return. The author provides practical advice on how to use the Yield Book to measure risk and return, analyze the impact of interest rate changes on a portfolio, and construct efficient portfolios. The author's emphasis on using the Yield Book to construct portfolios that balance risk and return is particularly valuable, as it provides investors with a systematic and disciplined approach to portfolio construction. Point 7 highlights the impact of regulatory changes on the bond market, which are discussed inside the Yield Book. The book covers the introduction of the Volcker Rule and the Dodd-Frank Act, which were enacted in response to the 2008 financial crisis. The Volcker Rule, which was part of the Dodd-Frank Act, was designed to prohibit banks from engaging in proprietary trading, which is the practice of trading securities for the bank's own account rather than for clients. The Volcker Rule has had a significant impact on the bond market, particularly in terms of liquidity and pricing. The book provides insights into how the Volcker Rule has affected the bond market and how investors can navigate the new regulatory landscape. The Dodd-Frank Act also introduced new regulations aimed at increasing transparency and reducing risk in the bond market. The book covers these regulations and explains how they have impacted the bond market, particularly in terms of risk management and pricing. Furthermore, the author discusses the impact of regulatory changes on the development of new investment products, such as exchange-traded funds, ETFs. The book explains how the regulatory landscape has impacted the growth of ETFs and how investors can use these products to gain exposure to the bond market. Overall, the author provides valuable insights into the impact of regulatory changes on the bond market. The author's emphasis on the need for investors to understand the new regulatory landscape and to adapt their investment strategies accordingly is particularly valuable, as it provides investors with a framework for navigating the complex and ever-changing bond market. Point 8 highlights that Inside the Yield book provides numerous examples and case studies to illustrate how to apply the concepts discussed in the book in real-world situations. The author uses these examples and case studies to show how investors can use the yield book and other tools to measure risk and return, construct portfolios, and manage risks associated with fixed-income securities. The examples and case studies cover a range of scenarios, from constructing a portfolio for a pension fund to managing a portfolio of municipal bonds. The author provides detailed explanations of the investment strategies used in each scenario, as well as the risks associated with each strategy. The case studies also provide insights into how to manage risks associated with fixed-income securities. The author covers strategies such as duration matching, immunization, and credit risk diversification, and provides practical advice on how to use these strategies to manage risks. Furthermore, the case studies provide insights into the impact of interest rate changes on fixed-income securities. The author explains how to use the yield book to analyze the sensitivity of a portfolio to interest rate changes and to construct portfolios that are less sensitive to changes in interest rates. Overall, the examples and case studies in the book provide investors with valuable insights into how to apply the concepts discussed in the book in real-world situations. The author's emphasis on practical advice and real-world examples is particularly valuable, as it enables investors to develop a deeper understanding of bond portfolio management and to apply this knowledge to their own investment strategies. Point 9 highlights the importance of understanding the economic environment in which fixed-income securities operate. The book explains how changes in the economic environment can impact the performance of fixed-income securities and how investors can use this knowledge to manage their portfolios. The author provides insights into the macroeconomic factors that impact the bond market, including inflation, economic growth, and monetary policy. The book explains how these factors can impact interest rates and the performance of fixed-income securities. The author also discusses the impact of global events on the bond market, such as political turmoil, wars, and natural disasters. The book explains how these events can impact the creditworthiness of issuers and the performance of fixed-income securities. Furthermore, the author provides insights into the relationship between different types of fixed-income securities and the broader economy. The book covers the impact of interest rate changes on different types of fixed-income securities, such as government bonds, municipal bonds, corporate bonds, and mortgage-backed securities. Overall, the author provides a comprehensive guide to understanding the economic environment in which fixed-income securities operate. The author's emphasis on the importance of understanding macroeconomic factors and global events is particularly valuable, as it enables investors to anticipate changes in the bond market and to adjust their investment strategies accordingly. Point 10 highlights the importance of staying up to date with the latest trends and developments in the bond market. The book covers the latest trends and developments in the bond market, including the rise of passive investing, the growth of the ETF market, and the increasing popularity of sustainable investing. The author discusses the impact of passive investing on the bond market, including the growth of index funds and ETFs. The book explains how passive investing has changed the landscape of the bond market, and how investors can use these products to gain exposure to the market. The author also covers the growth of the ETF market and the increasing popularity of sustainable investing. The book provides insights into the factors driving the growth of these trends and how investors can use these products to align their investments with their values. Furthermore, the author emphasizes the importance of staying up to date with the latest trends and developments in the bond market. The book covers resources that investors can use to stay informed, including financial news sources, industry publications, and conferences. Overall, the author provides a comprehensive guide to staying up to date with the latest trends and developments in the bond market. The author's emphasis on the importance of staying informed is particularly valuable, as it enables investors to stay ahead of the curve and to adjust their investment strategies accordingly. Thank you for your interest in this book. Please leave your feedback on these thoughts in the comments below, or just put a like on this video. It will help me stay motivated and make more videos like this. In the description of this video, you may find links where you can purchase this book.